The Property Bulletin by London Property, the home of superprime.
UK residential property transactions hit over 90,000 last month, reflecting growing buyer confidence and an improving mortgage market. According to HMRC data, transactions in August reached 90,210, marking a 5% increase compared to the same month last year, partly due to the Bank of England's interest rate cut in July. Non-seasonally adjusted transactions surged by 8% compared to July, reaching an estimated 104,330, indicating renewed market activity. In contrast, seasonally adjusted transactions experienced a slight 1% decline month-on-month, marking the third consecutive monthly dip. Nick Lehman, chairman of Jackson Stops, commented, "This growth is partly driven by greater choice in mortgage products and rising buyer confidence, further supported by last month's interest rate cut by the Bank of England. He anticipates that this positive momentum will continue throughout the remainder of the year." While the residential market experienced a boost, non-residential transactions fell by 8% on non-seasonally adjusted basis compared to July, and 4% year-on-year, reflecting concerns over upcoming tax changes in the autumn budget. Seasonally adjusted non-residential transactions dipped by 1% month-on-month. Jason Tebb, president of On the Market, observed, "It's encouraging to see transaction numbers improve year-on-year, as they're a far better indicator of the health of the housing market than house price movements." The post-pandemic recovery and recent mortgage rate adjustments have invigorated the housing market. However, despite the rise in activity, affordability concerns persist, prompting sellers to adopt more realistic pricing strategies. As the year progresses, all eyes on how these trends will shape the future of the UK property market amidst economic changes and interest rate fluctuations. The former MI5 spy school, overlooking the Thames, is to be transformed into luxury apartments. The landmark building, 1 Bessborough Gardens in Vauxhall, will soon be converted into luxury apartments, marking a significant transformation for this iconic property in the city of Westminster. Property firm Firethorn Trust has acquired the building, which boasts a rich history and a prime location overlooking the River Thames. 1 Bessborough Gardens was opened by the King, then Prince of Wales, in the 1980s, and was occupied by a government agency for 2 decades. It has long been rumoured to have housed an MI5 spy school, though this was never officially confirmed. The building offers a direct view of the MI6 headquarters on the south bank of the Thames, adding to its intrigue and allure. In 2005, the government applied for planning permission from the City of Westminster Council to install several satellite dishes, security gates and a backup generator, further fueling speculation about the building's secretive past. The 4-storey site, located on Vauxhall Bridge Road and overlooking Bessborough Gardens in the Thames, spans an impressive 70,000 square feet. Firethorn Trust, a UK real estate investor, developer and asset manager, has now secured planning permission to convert this landmark building into residential accommodation. According to a report by City AM, the development is expected to house around 60 modern apartments, blending contemporary living with the building's historical charm. The transformation will offer future residents a unique opportunity to live in a property with a rich history and unparalleled views of one of London's most iconic riverside locations. As 1 Bessborough Gardens transitions from a site steeped in mystery to a luxurious residential address, it stands as a testament to London's ability to blend history, modernity and prime real estate. The recent sale of property tycoon Giles Mackay's Chelsea home to the President of the UAE, Sheikh Mohammed bin Zayed Al Nahyan, has added to the trend of wealthy Brits moving to Monaco. Mackay, aged 62, relocated to the Principality soon after completing the £65 million sale in November of last year, as reported by The Times on September the 16th. It appears Mackay is not alone. According to The Times, over 9,500 wealthy Britons are expected to move abroad this year, following changes in government policies and potential tax reforms, such as the abolition of non-dom status and alterations to capital gains tax. Monaco has long been regarded as a favourable destination for the super-rich, especially with its tax-friendly policies. While Dubai, Switzerland, Portugal, Italy and Cyprus are also popular choices, some countries have recently revised their financial incentives. For example, Italy's flat €100,000 tax bill for non-residents was doubled shortly after its introduction, and Portugal's Golden Visa programme was quickly curtailed in response to local housing concerns. In contrast, Monaco continues to maintain its appeal, with a steadfast commitment to attractiveness, safety, education and fiscal advantages. For families in particular, the Principality offers a secure environment and high-quality education. Mr. Mackay won't be short of familiar faces in Monaco. The British community in Monaco is diverse, with well-known figures from various industries having already made the move. Businessmen include Sir Stelios Hadjianou, EasyJet founder, Sir Jim Ratcliffe, Ineos CEO and Manchester United owner, Sir Philip Green, Topshop, and Baron McAlpine. From entertainment, there's Dame Shirley Bassey and Ringo Starr, the former Beatles drummer. And in sports, Formula One figures like Lewis Hamilton, Lando Norris, George Russell, and commentator David Coulthard are all residents. The Chelsea property sold by Mackay at the Boltons has a storied history. Previous residents include Madonna, Douglas Fairbanks Jr., and Beatrix Potter. Complete with a glass lift, basement swimming pool, and cinema, it's a symbol of London's prime real estate, a market many are now choosing to leave behind. Monaco continues to shine as a beacon for the wealthy, offering not just fiscal advantages but a lifestyle that attracts high net worth individuals seeking stability, luxury, and a sense of community. New data from 20EA reveals a decline in the average length of residency in London and Scotland since Q4 of 2023, coinciding with these regions experiencing the lowest annual rent increases. While rental prices in London and Scotland continue to rise, the growth rate has slowed compared to the rest of the country, making tenants in these areas more inclined to relocate sooner. It appears that renters in these regions have become accustomed to high rental prices and now view them as the norm. In contrast, high rents and a surge in demand exceeding supply have made it increasingly challenging for tenants in other parts of the UK to move, resulting in longer tenancies. Katie Billany, Executive Director of 20EA, commented, "London tends to take a different trajectory to the rest of the UK. If rents have started to slow there, perhaps other regions will follow suit, and subsequently the length of residency will drop in the rest of the UK in the coming months." The trend is a positive sign for letting agents in London and Scotland, offering more opportunities for generating commissions from new tenants. However, in other regions with longer tenancies, agents may face challenges in maintaining profitability. To adapt, agents are encouraged to focus on improving tenant retention rates and investing in data technologies to identify market opportunities proactively. Billany also noted that many letting agents are losing business to platforms like OpenRent. Of OpenRent's 2024 listings, 50% were previously managed by another agent. This, coupled with the trend of increasing tenancy lengths outside London and Scotland, underscores the importance for letting agents to prioritise property management agreements to ensure profitability. Agents currently offering tenant-find, let-only agreements should consider moving landlords onto property maintenance contracts to create a more consistent revenue stream. By doing so, they can better navigate the evolving rental landscape and safeguard their businesses against emerging competitors. As rental growth dynamics shift, letting agents will need to adapt their strategies to stay competitive, ensuring they can capitalise on changing trends and continue delivering value to both tenants and landlords.
Subscribe to our newsletter to receive our weekly bulletins and stay ahead of what's shaping the super prime property market.